Yo, what's up? What's up? How y'all doing? It's Hungry Millennial back again with another weekly recap. Uh, this past week in the market, man, people was going crazy, making a lot of money. Man, we had some people in some of the discords that we were a part of that took roughly, I think it was like $20 and turned it into like 15,000. It was crazy. So it's like, when we look at, the market, we start talking about, um, you know, trading the strat. We start talking about options. We start talking about getting to the bag and making money. You got to realize there's a lot of ways to make money out here. And the beautiful part is I love being, what I'm saying, in a country where, the the level to get into the market, the bar is so low, right? So the cool part about options trading is you can have $50 and buy some calls that was worth 5 cents or whatever and really blow up. And really, when you're focusing on structure and you got a plan, you get in, get out, you can really make a lot of money and make a lot of moves. So what we're gonna talk about today is locking into the market. We had a lot of great opportunities last week, but we also squandered some, right? And so over here, what I'm saying, on the shift, I like to give y'all the real deal, Holyfield, and make sure that what I'm saying, y'all get the opportunity to make money and learn from my mistakes, and also use this kind of as a trade journal, seeing where I'm going and what I need to do to capitalize and really win in the market long term. So let's get into it. Uh, so this past week we had our biggest wins were Hims, which is like a pharmaceutical company. They've really been making waves and breaking the mold and making sure people can get in financially. Bank of America, um, they rebounded a lot from the dip that we had that happened due to tariffs, and then Carvana as well. So Carvana, they dipped a lot because of the tariffs, right? So what we like to talk about in the market, when we get into this bag, we can make money up or down, up or down. It don't even matter. And then biggest losses were the SPY. In the SPY, we overplayed our welcome. And then Microsoft, it was kind of a day trade that just went the wrong way. And then Costco was another day trade that went the wrong way, right? We had an early entry when we should have waited to make that entry. So, we working on focusing on our entries and our exits. When they hit those key levels, not getting greedy, getting out. If we see that candle reverse, what I'm saying, it's time to get down. You know what I'm saying? So looking at those things, really capitalizing in the market, moving the right way. I'll kind of do a little recap of some of our lessons learned, but I want to go to our chart here and tap into um, some of the entries that we did take and some of the plays that we took. So with Hims, we were up $372 was our profit on Hims this week. So we bought here, and this was, I believe it was like Tuesday. And so we bought at the bottom, right? But we bought once it triggered this level. So when we do our charting, we mark out, hey, based off of that daily candle, where do we need to go for it to enter to call it a call, right? And so what we did is we saw that candle, that two up right here, and when you trade the strat, shout out to Rob Smith, RIP. When you trade the strat, these twos mean you got momentum, and that momentum can be up or down. A one equals sideways trading, and so we trade the strat around here. So we saw that exit, and when we were pre-charting, we pre-chart like every night before like the market. We look at the market and say, hey, where do we want to go? Sometimes we do our charting in the morning, but we want to make sure that we chart out our plan. So I picked a $26 strike price, right? And so that $26 level was here. So our strike price is saying we think it can hit there. But if we enter here, as soon as we enter and it starts, that movement momentum starts to go up, we making money, right? So we already in the money right here. Then what happens is, so we took that strike price, it went past our strike price, so we knew that we could really make a bag here. I think I only paid I think it was like roughly $200 or something for this play. Ended up coming out with a whole $572 altogether because I got my money back, right? With $372 profit. So we could have made even more profit here though. This could have possibly been 1,000 right here, right? what had happened during the daytime is the bid ask spread was really big. I have a PDF that I can send over. Just hit my inbox and it'll kind of explain the bid ask spreads and the basics of options trading. But it went. But when it decided to teeter down, I think we were up. This play right here would have put us at $3,000. The market was so volatile. You see this really big candle? That was a $3,000 play right there. But the other issue is it hit the average target range. So the average target range is saying, hey, how far on average in the last 14 days has this stock gone? Right. And so, but here's the thing. It's like, shout out to iCurlyK. It's like when you tell somebody, you say, hey, I can only run 2 miles. I know you're a 5 miler, but that's all I got in my tank. If we do a little bit more, we do a little bit more, right? It is up to you guys to say, hey, this is where you stop, right? This is where that exhaustion risk tends to come in. And so it hit this key level where there was all this liquidity, and then it bounced and reversed, right? But we were thinking it was going to continue to reverse. But if we were, paying attention to this structure right here, as soon as it started to boom, 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 we would have got out around this area. We would have been good to go. So that was our biggest win for the week. We're going to tap into our biggest L for the week. Our biggest loss was roughly $1,000. It was because of a swing trade on SPY. Right now, trading the market is very volatile. And if you're a day trader, you need to watch out for swing trades, especially in this market. And so what we're doing here is we bought here. This was like midday Wednesday. And then it went up and went up. So we thinking, man, hey, good news came out. This was right after that big candle and the markets went crazy. I think they jumped by like 30, 40 points, right? So we like, hey, let's get into the action. If we keep this action rolling, right? We got a little confident, got a little bit beyond ourselves. And so we tried to chase it into the next day. But what happened? That market open dipped because people didn't believe in the sentiment as much, right? So we ended up watching it dip. And if we would have got out here, we would have been fine, right? So because we bought here, we actually wouldn't have had a loss or had a minimal amount of losses. But we decided to stay and pray and watch it. But here's a rookie trading mistake, right? If you see a gap down overnight, it's probably gonna keep gapping because now everybody has got that news that, hey, that gap down overnight, that don't mean good for the market, right? So it gaps down here, boom, it keeps going. We like, man, we got to get out of here with some type of cash. So we sold here. And I think the play we were in, I think we bought like $2,000 worth of calls. And that's why we had that big loss right there, right? But, I like to talk about the wins and the losses with you guys to make sure that we stand on point and really focusing on the good stuff, right? So here, lessons learned, follow your key levels. If I would have followed my key levels early on, that bounce, I would have got out early, right? And we had exhausted that average true range. Once we exhausted the average true range, I should have known, hey, it may come down. But the market was super volatile, and we decided, hey, we're going to go for the gusto. The cool part is we're at a level now where we're not blowing up accounts or any of those things. So we're managing our risks in a way to where we still got money to continue to trade, right? But we got to be careful because we can't get too confident because eventually, you got money still to trade. You got to know when to leave the casino, right? When to get out and have, those calculated risks, right? And then be careful with swinging day trades. We talked about that with SPY. You don't want to continue to look at day trades, especially in a volatile market, as swing trades. Get in, get out, get your bag, go home. So that way you get your bag the next day and go home, right? Because there's money to be made every day, except for this next coming Friday, because next Friday is Good Friday. The markets are actually closed. So remember that, mark that on your calendars. And then go small on positions until breakout confirmation, right? So this week on some of the plays that I had mentioned earlier that we took some losses on, like Costco, we didn't wait for the breakout for a larger candle on that breakout. And I'll kind of show you what that looks like on a larger candle for that breakout. If we're looking at these big candles right here, that would be a larger breakout. say this is the resistance level, and you get that big old candle to the upside, that would be considered a larger breakout, right? So we got to watch for that momentum in the market to make sure we're getting in with some real strength. And the truth is like a lot of times as a day trader, you get froggy, right? You're like, oh man, I want to eat on something today. I want to gnaw on something today. So you go for the bone where you could have had the big bone, right? You go for a chicken bone where you could have had a cow leg or something like that, right? You could have one of them turkey legs that they serve at Six Flags. Uh, so next week, what we're looking at is we are looking at SPY calls for 540 calls for 414. We're looking at Apple calls 205 calls, 207.5 calls for 417. We always plan looking at SPY on a regular basis to see what happens. And then JP Morgan 240 calls, Roku 65 calls. So one thing I don't want you to get caught up on is for you to say, hey, it's a call, it's all calls. Well, with the strat, we trade calls and we trade puts. So if it goes the other way, if it reverses the other way, we still gonna make money. We still gonna get that bag, right? So we team, let's get that bag around here. Either way it goes, the economy doesn't dictate how we gonna move. It's gonna give us some news, and then we're gonna play the news. We're gonna get in, we're gonna get out. So let's look at this trade right here. Tap in. So this is what I got charted out for this coming week. So what you'll see here is we got 540 calls and 520 puts, depending on if the market reverses. We're thinking like with that tariff relief that we just had, we may get some good calls. Right now, futures are up. So we want to look at this right here and pull up my chart. So if you see, I've got puts charted out and I've got calls. So if it goes up, it exceeds that level, we get that big candle we was talking about. Hey, we looking to potentially hit 545. So we'd be looking at, what do we have charted over here? We'd be looking at 540 calls. So the reason why we're looking at 540 calls is because that 540 is in between this call where we're going to enter in our target level, right? So that way we can exceed that range and still make money. And then once it hits our target, we got a couple targets in here. We got a target at 546.33, right? We watch it for momentum there. It's not too hard for it to hit this next target at 546 and then potentially hitting that 553. That 553 range is that exhaustion range. So we're going to want to be wary of that. Once it starts to hit this range, we're going to be looking to get out. Unless we got some big force, some big news to the upside, and then we may watch it, but we're really looking to take profit at that point, because at that point we went from, we had 540 calls. At that point we did like a 15-point move roughly, right? So we want to watch that. And then to the downside, the cool part is we got this nice, beautiful key level here. We got this nice 525 call, 525 puts that we can get in here. And here's the cool part is it's a psychological level, because traders, they typically want to trade in 5s, 10s, 15s, zeros, right? People love clean numbers. And so when you're looking at a clean number, they're going to say, hey, how clean is that number to get there? So that 525 is awesome to the downside. So either way, we can make the bag, upside, downside. They got that new song, Uptown, Downtown. Hey, we going uptown, downtown. We going, sideways, where however we can get to this bag, we're going to get to this bag, right? And so we went puts here. And then that target level, the next target level is going to be 520. And then after that, you got a 513.93 is the exhaustion level, right? For that average target range for that daily, for that 20 points up or down, right? And here we can make money up or down. We always plan with the strat. We're going to make money up or down. That's the cool part about options. You make money up or down, right? So let's look at our second play that we're looking for. Is Apple. We're looking at Apple calls or Apple puts, right? They had that, I think there was potential fake news that came out where they were saying Trump was saying something about tariffs were relieved or being reduced for like Apple products, or they weren't going to be taxed or whatnot. Come to find out that was false. But either way, it go either way, right? So like I told you, we'll look at this Apple chart. 205 calls or 207.5 calls or 195 puts right? Like we talked about, you can make money off of puts as well. So let's tap in here, see where we want to go. Got this pre-charted out. So Apple calls puts here. We're looking at it from the right now it's currently at 198.02. We're looking at it from the last level that it closed at, right? It hit here, and we enter calls. It could break out and go to that 200 level. Then it could go to that 204 level. Then it go to that 207 level. So that way we can find our average target range. And then, like I said on the other one, our average target range is where we're gonna be looking to get out. So here we want to do 205. The reason why we want to do 205, because why? It's a psychological level. So if we do 205 strike price and we get up there, we keep going. Even if we don't hit the 205 and the reverses, we can still make money because we got in at this level once it hit calls. So if we get in at the 199 level, we can still make money all the way up until it decides it's going to reverse, because that is how you play the options game, baby. So keep going. We could do 207.5 calls, depends on where that's going as well. So we got a lot of great upside until we hit a resistance level, right? Then potentially bounce back. Like we talked about with our L's, once we hit that resistance level, we're going to go the other way, right? So, we're going to keep grinding, keep doing what we need to do. But puts, we ain't afraid. We ain't scared, right? So with the puts right here, if it goes the opposite way on puts, where's our next key level? Our next key level is near the average target range, right? So we could be going. So I'm looking at getting 195 puts, right? If we break this right here, I'm looking at getting 195 puts down to this down to this potential downside right here. And like I told y'all before, how we calculate that, we take this 198 and then we add it to the average total range. That gives us our downtown, uptown, downtown right there. And that's gonna put us at 186.19 or 0.79, right? So we can make money to the downside too. We're looking for it to go to that 186 target level. And then the cool part about all of these apps is you can set alerts on those. So when things do pass those levels, you get alerted. So that way you ain't gotta be stuck to the screen all the time. You obviously want to set stop losses. I typically set my stop losses. Like if I'm walking away from the screen, I'll typically set my stop loss at 20 to 30%. If I'm at the screen, I can be waving in around 40 to 50%, depending on the momentum of the trade. So, this has been another great episode. I appreciate y'all tapping in with the Hungry Millennial. If y'all got any questions about options trading, getting in the market, what you should be looking for, what you shouldn't be looking for, don't be afraid to tap in. Holla at your boy. Let me know, what stocks y'all looking at, what y'all looking at playing. If y'all see any major upside, any major downside, just keep tapping in. Let me know, as we keep learning and growing. I'll be here for you, being able to tap in and figure out what you want to learn about and what you want to do. But it's one of those things where like we live in the United States, so get in and make some money, get you a bag. You don't have to be stuck in a 9 to 5, always wondering where your next meal is coming from. I'm a testament to that. We're gonna keep getting to the grind. Currently studying for my certified personal trainer. So if you know anybody that needs a personal trainer out there, let them know. You know what I'm saying? You got somebody that's a reputable, individual as well. And then we just gonna keep learning and growing together. So y'all got any ideas, any questions, concerns? Tap in, like, comment, subscribe. Check us out on YouTube. Hungry Millennial out. Appreciate you.